The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on Market Talk as we continue to recap the May WASDE report. Also want to dive in and take a look at the livestock trade action that we saw on Friday as we wrapped up the week. Welcoming in a new voice to the show, Bryan Irey with Crossroads Co-op. They have locations out in the Plains, Western Nebraska region, and we welcome him into the program here today. Bryan, thank you so much for joining us here on Market Talk. It's great to have you on the show. I hope you're doing well.
I am well, and thank you for having me. It's a pleasure to be here.
Well, Bryan, let's dive in. And we were chatting a bit before we jumped on air. Obviously, a very busy day on Friday with all the information swirling and the release of the May WASDE report from USDA. I think just in general, I'd love your thoughts. I know there were some surprises when corn exports, the wheat numbers, there were some surprises there. What's your biggest takeaway as the dust is settled on Friday's session? Wheat higher, corn mixed, beans under pressure. What's your biggest takeaway in the grains after the report?
I think, first of all, that is really kind of what we had anticipated coming into the report. We had talked with our advisory service yesterday, and I asked that question specifically, and they said yes. I think we could come away with a bearish corn report, a bullish wheat report, and obviously that's what we got. And I'm not sure that the 75 million bushel decrease in corn should be a surprise. I think it's surprising that they took it all at one time. I think maybe a lot of the trade was anticipating that they took a 25 to 50 million bushel cut here and then possibly another one in the June report. And I think that maybe caught people flat-footed. But the fact of the matter is, with the recent cancellations of Chinese corn, or of corn sold to China, it has certainly dampened the prospects of hitting that 1.85 billion bushel number that the government has targeted. And then getting back to the wheat, as you mentioned, I think that that is a number, the ending stocks number as well as the production numbers, yield numbers are all numbers that could shrink by the time we get to June. I think, the big question today is probably how much actual abandonment have we had in Kansas, Oklahoma, and North Texas at this point. And I think it's a significant number. I think it's a number that could grow to the point that wheat futures could become very volatile as we move forward here. Now, interestingly enough, on the flip side of that, yesterday we had, as I mentioned, we had a phone call with our advisory group, which is advanced trading out of Bloomington, Illinois, and we discussed the wheat situation at length, and it looks like there are areas of the United States where hard red winter wheat could get imported here over the coming months, which is that's a significant factor, I think.
That is very, very interesting. And I think, too, obviously, KC Wheat was the upside leader on Friday's market trade. We got to distinguish between the three classes, too. I think we have to keep that in mind. KC Wheat and the soft red in Chicago, the spring wheat, Minneapolis, planting delays in the Dakotas and Minnesota. That's another issue that is kind of behind this wheat market action we've been seeing here this week, Bryan.
Yeah, absolutely. And you're exactly right on the spring wheat crop. I think that is a situation that as we move forward here, the trade will keep a close eye to see how quickly that crop's going in the ground. And I don't have the numbers in front of me, but we were roughly 25% planted, I think. I think that last 75% could come begrudgingly, and getting that crop in the ground late is it just never works to the advantage of the producer when that happens, nor the yield and that type of thing. And you're right on the soft red winter wheat crop. I think that we're in good shape there. The interesting thing that we're hearing is the best market for that wheat today is Hereford, Texas, or Southwest Kansas, and I think you have some major implications there with not only that being the best market for the wheat, but displacing corn and rations down there again. All of a sudden we're making more feed grains available to cattle feeders and increasing general overall supply. And it'll be interesting to see if we see feed numbers and corn drop moving forward as a result of that.
Well, that's a great segue for us into the cattle market. Bryan, we had a pretty solid, strong day on Friday. I think some of that may be tied to corn being a little weaker here and there as the board took advantage on both fats and feeders. I know you're in feedlot country. This cattle market, it's been a hot topic here the first few months of the year. What's your take of the market action we saw in cattle on Friday and just the overall tone here post-WASDE report?
I totally agree with everything that you said about the market gaining some ground in terms of us losing value on new crop corn specifically, and the fact that we have some other feed grains around here. I think that a month and a half ago, I did a tremendous amount of research on the cattle market, cattle numbers specifically with two cattlemen that I have known for a long time and respect. They're very, very knowledgeable folks. And the numbers issue obviously is at the root of the problem. I think the USDA has the cow herd being pegged at down 4% last year. They felt like we had killed 4% of the cows. And you talk to these guys and get in depth with it, they will tell you that the number is probably in actuality twice that it's 8%. And so again, you get into that situation where it takes a long time to replace heifers. And even a lot of talk this year that there may not be much heifer retention by ranchers due to the fact that heifers are going to have such a good value as feeder cattle that they may not want to put that high-priced heifer into their herd. They may want to wait a year or two to tone this thing down. But overall, I think that's a really good point. We're seeing cattle numbers in our part of the world drop. I think no matter how you shake this thing loose, beef prices are going to be higher as we move forward. I think feeder cattle are going to be hard to come by, and it's going to put a lot of pressure on the pocketbook of the consumer in the end.
Well, great thoughts there, Bryan. Before we run out of time today, I'll leave the floor open to you. Any final thoughts on your mind as we wrap up the week of trade? Anything, grains or livestock, or anything you want to reiterate to folks who are listening in here today?
No, I think it's going to be a very, very bumpy ride here for the producer trying to market corn, and I think specifically wheat as we move forward. I mean, we've definitely moved into a new paradigm on corn values without a doubt. I think that right, wrong, or indifferent, we've kind of resolved the feed grains issue here in the United States for a moment. We're going to have plenty of them around, and we're just going to see cheaper values as we move forward, and that is not working to the producer's advantage, obviously to the end user's advantage, and they need a break here too. I mean, they've been through a very tumultuous 2 or 3 years. And from the wheat angle, I think the wheat situation is probably the most interesting and could be potentially the most volatile situation we have out there in terms of marketing. I spent 2/3 of the morning talking to wheat farmers here in Colorado and western Nebraska, where we actually don't have a terrible wheat crop. It's not in great shape, but we've had 2 to 7 inches of rain out here over the last 72 hours, which has created some optimism. And I've lived out here for my entire life. We we will we will raise more wheat in Colorado than it looked like we were going to a week ago. But I think the trick for the producer is getting it marketed right, and that's going to be very difficult as we watch next week very closely with the Kansas Wheat Tour. We already know that Oklahoma is only going to be around 50 million bushels. I think a lot of early estimates have Kansas at 180. And I think that number shrinks, and I think it pushes wheat back over the $9 value. And the trick for the producer is going to be selling it too quickly. Not that $8.50 is a horrible value for wheat, but there's probably going to be some opportunities to push those numbers back above $9 here at some point.
Well, great thoughts there. We will be watching that Kansas Wheat Tour next week, and also the rainfall totals you mentioned there. We'll be watching how that helps things out, or whatever happens moving forward here as we go through the month of May. With that, Bryan Irey with Crossroads Co-op. We appreciate the time. I know folks can learn more at crossroadscoop.com. Bryan, thanks so much for joining us, and have a great weekend, sir. We'll get you back on the show soon.
Sounds good, and thanks for having me. I really appreciate being here.